profits as investments in India are yielding good returns. She adds that several steps have been taken in the budget to fire up India's economic engine.
Shares of Glenmark Pharma and GSK Pharma surge in trade after reporting strong third-quarter numbers. GSK Pharma hit the upper circuit after delivering better-than-expected numbers. Meanwhile, Mahindra Mahindra fell in trade despite robust bookings for its EV launches. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you prepare for the next trading session. And today definitely was a much better session with lots of green along with some red. I'm Prashant. With me, my colleague Sudip. Sudip, hi.
Hi, Prashant. Lots of green. I think it's all relative, right? Now our expectations have fallen so low that even if there's some 30, 40 points of final green on the screen, it seems like a fantastic day, and it was.
It was a fantastic day. I mean, maybe the definition has changed. Because expectations have been so muted, right? Because the market fell for 8 days in a row without a break. And today was that break finally, right? Otherwise, it would be 9 days in a row. So 30 points higher, 200 points off the day's low. Nifty Bank saw some recovery. Mid-caps and small-cap indices, although they were kind of flattish to slightly lower, did see strong recovery as well from the lows. Market breadth was negative. I think by close, some 2:1. 2,000 lower and about 1,000 stocks higher. But, it's good to see more two-way market rather than just a one-way down and out kind of a session, which we've had now for many, many sessions. Now, of course, US markets are shut overnight, so no cues there. But I think it's not as if US has been really influencing trade one way or the other, except, of course, headlines on the Trump side, tariffs, etc. Maybe a little muted from that corner as well. But we'll have to just sort of rebuild a little bit here because global markets have had no problem. They've chugged along nicely. Remember, the MSCI World Index on Friday made a new high. So it's not as if the global market has been having any trouble at all. It's the market here which has been battered down quite a bit. Surabhi.
Okay, well, actually, to talk about that recovery, and today the best part of that recovery was that mid-caps managed to hold their ground after so long. We're talking about this mid-cap carnage, the index having lost 20% from the peak. Well, guess what? Today there was recovery and it did not get sold into. So the bulls will take that with both hands. And finally, the mid-cap index was actually looking better than the Nifty, 0.4% up on the mid-cap index. Small-cap index was, well, not too much of a gain, but at least it managed to recover to close at the flat line. The advance decline ratio was actually the healthy aspect of trade today because after a long time, you had the the declining line still overwhelming, but not as overwhelming. Remember, we were in a situation where the advance decline ratio used to be as negative as just one stock advancing to 6 stocks, 7 stocks declining. So slightly better. The VIX was, up and about today, almost 5% higher because of the volatility. We started with deep gashes, then the recovery, some choppiness. So that's something to map as well. The sector of the day has to be pharma and healthcare. Across the board buying coming through in a lot of mid-cap and small-cap pharma stocks as well. Pharma and healthcare, even the Nifty healthcare, if you look at that, up about 1.5%. So looking good, some green and some buying in pharma stocks, maybe just what the doctor ordered today. Let's quickly move on and talk about what's the lineup on the show like. Well, we'll start off with the key movers and shakers of the day with Vivek. He'll bring us the details of the stock-specific action. Stocks on the radar include M&M. Lots of brokerages have been quite bullish on the stock after the EV launches, but the stock was down today. We'll talk about that. Pharma names like Glenmark Pharma and GSK Pharma were buzzing around after the third quarter performance. We will dive into those reasons as well. But first up, over to Vivek for the action from the street.
Well, thank you so much for that. After almost 8 sessions, some green on the screen is what we managed to see. Quite a few stocks on the radar. Let's look at the list of positives first. First on the list has to be Godfrey Phillips. Very strong set of results that the company declared a few days ago. Along with that, volume growth significantly outpacing that of the industry. Stock ended higher by over 17%, top gainer on the NSE 500 index. Like you mentioned at the start of the show, the entire pharma pack, after 2 weeks of underperformance today, bounced back very sharply. Names like Pyramid Pharma, Glenmark, Jubilant, Aurobindo, so an entire across-the-board buying that you saw as far as the pharma pack was concerned. In fact, another stock that actually rebounded and saw very sharp buying today was GSK Pharma. Again, this particular stock on the back of a very strong Q3 ended higher by over 15%, and this was on good volumes as well. The other stock on the radar was Manappuram. Remember, the stock saw a very steep sell-off after muted set of results. The stock exited the F&O band today, ended higher by over 8.5%. And CG Power, this stock from the broader end of the market, in fact, top mid-cap gainer in the session today. On the other hand, list of laggards, when you look at it, M&M, something that you alluded to earlier, good response as far as the EV segment launches were concerned, but still missed the street expectation on the back of that, ended low by over 3.5%. Borosil Renewables, muted Q3, company also alluded to some demand worries, and that is something that we need to get a lot more clarity on from the management. RateGain Technologies, muted Q3, stocks saw significant selling pressure. PP Fintech, surprising name today, but this particular stock saw selling pressure throughout the trading session, ended lower by over 5%. And Senco Gold, worries on this particular name continue. Today, the stock saw another 9% fall on high volumes today.
Vivek, thank you very much for that. Let's actually play out that soundbite. FM Nirmala Sitharaman attributing the recent FI selling to a spree of profit booking. This was in response to a question from CNBC TV 18's Yash Jain at an event in Mumbai. She suggested investments here are yielding good returns and added that several steps have been taken in the budget to fire up India's economic engine. FIIs have net sold equities to the tune of nearly 1 lakh crore rupees since the start of 2025. Listen in.
FIIs also go out when they're able to, in a position to book profits. Indian market today, Indian economy today, has an environment in which investments are also yielding good returns and profit booking is also happening. And I'm sure you would have seized that fact also.
All right, let's move on and talk about some stocks that were in focus today. M&M shares were down almost 4%, despite the company saying that it has gotten over 30,000 bookings for its latest electric SUVs. This is just on the first day that the bookings opened. We have Sudarshan joining in. So 30,000 plus bookings on day one, and yet the street was a little disappointed. What happened? Okay, I think we'll get to Sud in just a bit on this. We'll talk about this. Let's go to our guests and get their perspective on this. We have, of course, Sudip Bandyopadhyay with us. Sudip, you tell us, M&M, I mean, the stock has been a great wealth creator, but what was this today? Just profit-taking or something else? Something wrong with that EV bookings number?
It's profit booking, Survi. There's absolutely nothing wrong with the EV booking numbers. It's quite impressive, actually. In fact, their overall EV strategy is quite interesting, and I think it's a differentiated strategy. So there is absolutely no problem. And you are right. They have been a significant wealth creator. We have been liking M&M for quite some time. And remember, the SUV business is on a very, very strong, solid wicket. They're performing continuously, fabulously, and one biggest thing which we bank on is the farm equipment segment, where they have started doing well. They have a higher margin in that segment. And as and when things pick up in that segment, the performance will even improve from here on. So I think, M&M, these corrections are a good opportunity for further accumulation.
Oh, okay, all right. Let's actually go across to Sud now, who's ready. Sud, tell us more. Mahindra about a 4-5% fall today.
So there is nothing to complain as far as the booking data is concerned. M&M has reported strong booking data for its recently launched two electric vehicles, that XEV9E and BE6. And total bookings that company has got for both these units are around 30,200 and total booking value of around 8,500 crore rupees. Also, brokerages are positive as well. Citi has a buy call target is around 36.80 per share. It's a absolute volumes of these two electric vehicles are much lower than some of the recently launched models, but minded Citi is considering these two EVs, basically comparing these two EVs with the launches that company had made in petrol and diesel. So I'm not sure if that is valid comparison. Secondly, Citi says it needs to be seen how the EV facility ramps up and what is the cancellation rate. This is an important, basically we will have to see what is the cancellation rate. Normally EVs have in comparison higher cancellation rate if you compare with petrol and diesel vehicles. Nomura too has a buy call and target is around rupees 3,700 per share. It says it's an impressive start for EVs with 30,000 bookings, and company has received 56%, 44% bookings for both these electric vehicles. GS2 has a buy call with a target of rupees 3,800 per share. It says 30,000 bookings to imply 8% incremental SUV volumes for FY26, and BE6 and XEV9E models to collectively contribute 18% to FY26 SUV volumes of M&M. LRR2 maintains a positive stance. It says 30,200 bookings seem to be positive. Also, strong demand and new launches will be key to achieve FY27 monthly run rate for electric vehicles that company has targeted of around 8,000 to 9,000 units. So despite a strong booking, stock has seen a stock was under pressure. It closed with a cut of around 4%. If one reason I can attribute, it might be profit booking, because along with Maruti, it's one stock which have outperformed the peers in last 2 to 3 months.
Okay, all right, got it. Sudarshan, thanks very much for the details there on Mahindra and Mahindra. Let's move on now. Glenmark Pharma was sharply higher in trade today. The company reported its Q3 numbers. Clearly, the street is like something in these numbers. Let's ask Vinny what has worked for the company. Vinny.
Hi, Survi. So more than the numbers, I think it's the con call highlight that's, keeping the street happy. So firstly, in terms of numbers, it wasn't a great set of numbers that came in. A bit of a miss versus what the street was expecting. Yes, profits, the company actually came into a profit versus loss, but there was some inventory adjustments that were made, and that is why the revenues were also sharply higher. Profits also a sharp uptick that we're seeing. Though, when you look at it, research and development expenses, that was seeing a decline of around 27% on a year-on-year basis. Innovations were much lower. EBITDA margin, the company said they came in with an EBITDA margin of 17% and the guidance is of 19%. Now, in the con call, what did they highlight? That they expect this EBITDA margin guidance that they've given, that will sustain for FY25. And FY26 also, they're expecting an improvement in terms of margins. And this, despite them giving just a 17% margin, they're expecting those EBITDA margin levels of 18-19% to continue for FY25. Even revenue growth, they're saying that they're expecting a revenue growth of around 9 to 10%. And one of their filings which was pending, they have none of the pending filings with the Indore plant, which is actually gone under the US FDA inspection, and where they've received any observations. So not much of a concern coming on that front, and that is what the relief is coming in for Glenmark Pharma.
Vinny, why don't you run us through GSK as well, which was the other one in focus?
Yeah. So in terms of GSK Pharma, good set of numbers that came in from the company, and that is why we saw a run-up. Profits were up by 35%, revenue seeing a good growth of 18-19% as well. Volumes were very good across their segments, specifically the general medicine segment, that saw good volume growth, and overall saw a growth of 11%. Management said that they aim to sustain the margin levels. Cost optimization is something that supported the margins this time as well, and going forward also they expect this to continue to see an improvement. Other than that, the management has already planned some launches in the next year, FY26, and this is mainly 2 oncology drugs that will be coming out in FY26. So that is going to be interesting to watch out for, given that that has been picking up pace, and that is why GSK Pharma was in focus and buzzing in trade.
Thanks very much, Vinny, for that. Those are 2 names, Glenmark and Glaxo, but you had so many other names: Piramal Pharma, Aarti, Jubilant Pharma, Camlin Fine. All these smaller pharma companies did quite well. Sudeep, anything you like in this space?
Well, Piramal Pharma is what I like, I just mentioned earlier. GSK also has, the numbers are quite good, and considering that the oncology thing is, oncology segment is gaining momentum, I think is at August well for GSK Pharma. As far as, others are concerned, I like Mankind Pharma, which I mentioned because of the BSV acquisition, long-term positive. Also, they are completely insulated from the international market shenanigans and the tariff shenanigans. They're 95% domestic. So I like that company as well.
All right. Shorter conversation today, Sudip. Thank you very much for staying on and sharing that sort of perspective and your thoughts with us. We'll take a quick commercial break here. We'll come back with some commentary from market veterans that we got through the course of the day. Stay tuned.
See, there are some interesting data points. If you have the time, I will share. See, there are 2 issues over here. When people believe Indian retail investors have done very well, keep in mind the fact that you have a lot of new investors who come to the market in the current financial year. About 8 million out of 53 million unique mutual fund investors have come in the last 9 months. Yeah, and these are investors who I don't think will have the risk appetite to bear a big market correction. So how they are behaving, I don't know, but I'm sure there could be some signs. I suspect there could be some signs of panic over there. There are just so many stocks here, especially in the mid-cap and small-cap areas. So either you have companies which are trading at very expensive valuation but have decent fundamental. These are the high-growth companies, let's say in the capital goods space, EMS, etc. But we just struggle with the valuation of these companies, and they are so much priced to perfection. Even now, by the way, despite coming down 20-30% from their peak level. So any disappointment, you would see a big cut in the market price over there. Look at the PSU names in railways, metals. You will get a very good sense. But look at something like a BHEL, which we have been sounding cautious for the last 1.5 years now. The stock went up from whatever, less than 100 to 300, now down to below 200. I still think it's supremely overvalued. It will come to below 100, or rather, I should say, I can't forecast stock prices. The fair value.
Welcome back. You're with us here on Markets Forward. We're going to sort of play out some sound bites for you. One, of course, from Sanjeev Prasad. He's a long-time managing director, co-head of Kotak Institutional Equities, and he turned cautious early on, and he's still cautious, especially as far as mid and small caps is concerned. And then after that, we'll get you a foreign perspective from Victor Schwetz, the much-respected analyst from Macquarie Capital, and his thoughts on what foreigners are likely to do as far as equity markets here are concerned, whether they will return anytime soon. So those two conversations coming right up.
And if you look at the valuation of the large cap index, let's say the Nifty 50 index, it's not too bad, roughly about 20 times 1 year forward, about 17.5 on a March 27 basis. There will be earning downgrades, I'm sure, in some of the sectors. But broadly speaking, I don't see too much downside, as far as the large caps or some of the large caps are concerned, namely the financial names, IT, pharma, etc. Yeah, there are still pockets of overvaluation even in the large cap, but I can live with that. The problem still remains in the mid cap and small cap, areas. That is sector be dominated by mid cap, small caps, or the mid cap, small cap stocks. Still a lot of froth over there, and I think you would see a lot more correction over there because the fundamental value of many of these companies are far lower than whatever the current market caps and prices are. I mean, you talked about RVNL. Just now. I mean, the market cap of the company is something like 75,000 crores even now, by the way. Yeah? I think it is still at about 8 times book value, if I remember the book value correctly. Yeah? And about 40 times on March 24 profits.
The other question, and you'll have so many foreign investors also at the conference, right? Foreigners have sold some $21 billion of Indian stock from the peak in late September last year. So this year, I guess, we're giving back some of the crazy run over the last few years. But global equities generally seem to be, we're looking at Europe, for example. The Euro Stoxx 50 has come back to its same level as year 2000 after 25 years. Things are rising from the dead. China, for example, has started on a good note. Mostly tech, though. Does this mean more competition for this foreign capital? Because there was this argument which was made last couple of years that, there's only US and India, and that played out, for a while. Where do you stand on foreign flows, Sanjeev, from here on?
The foreign flows, I suspect, we should assume for the time being it's not coming back in a big hurry. And the reason for that is pretty simple. There is no new money coming into emerging market funds for the time being. And I don't see why that situation should change in the next 2-3 months at least, given the fact that the US market is doing very well. We have a lot of, policies which are still evolving, as far as the new US administration is concerned, which could work against the EMs for, if you see more, tariff being put on exports from some of the emerging market countries. So as of now, I would say most asset allocators would be a lot cautious on emerging market. And that's been the theme for the last, 3-4 months now. This whole thing started from late September when, first of all, I'm talking more from India perspective, first you had the India to China pivot, when China announced a host of policy measures, fiscal and monetary, to reboot the economy. And very quickly, by end October, when the chances of Republican Party winning all the 3 arms of the US government, started to build up, the so-called Trump trade, you had a pivot from EMs to the US. And that trend, unfortunately, has continued, from a perspective of EMs.
But let me first start with this fund flow question. Since October, India has only seen funds moving out of India and other EMs into the US. How long will the US exceptionalism continue, you think?
Yes, I think if you think of large economies globally, very few can add labor capital and grow multi-factor productivity at the same time. United States is one of them. But another thing to remember, the reason United States is growing so fast, because public sector is aggressively de-saving. So in other words, United States is running primary deficits, not absolute primary deficits, of about 4% of GDP. You can compare it to, say, Germany, which is way under 1%, and the same applies to European Monetary Union. It's double the level of Japan. So it's a mixture of domestic productivity and a very significant de-saving in the public sector in the United States. So what US is doing is basically sucking the growth from all over the world into the United States.
To my more important point, what are your views on India? We've already seen steady outflows of funds. Now, at what point do you think India will look attractive to you?
I think my view has always been that investors are too bullish on India. In a sense, expectation of 7 to 8% GDP growth rates cannot be fulfilled by India as it stands today. If you want to get to 8%, either capital efficiency have to be a lot higher than what India is delivering, or you have to improve dramatically domestic productivity, including agriculture, or more importantly, public sector has to de-save a lot more. In other words, public sector deficits has to be running at a much, much higher level. However, having said that, if you think of India, again, it adds labor, it adds capital, it's gross multi-factor productivity, which somewhere around 5.5 to 6.5%, call it roughly 6, should be the optimum level at the current positioning. If you want to lift it another 100 or 200 basis points above that, as I said, you need to address those three buckets. Now, if we think of close to 6% real, that's about 9 to 10% nominal. That's more than double the nominal GDP that China, for example, is capable of delivering. And so at that level, you would say earnings per share in India probably need to be in low double digits. You probably should be looking at 11, 12, 13. The problem is expectations are much higher than that. You're really looking at expectations of 16, 18%. So the way I look at India is a case of growing into growth, which is, in essence, a much better problem than trying to extricate yourself from the liquidity trap that, for example, China have found itself in. So China, to me, is a safe harbor during a storm, but otherwise it has a very intractable problem. India might suffer during the storm, but essentially India have a circular capacity to continue to grow into the growth that India will be able to deliver.
If you look at the valuation of the large cap index, let's say the Nifty 50 index, it's not too bad, roughly about 20 times 1 year forward, about 7.5 on a March 27 basis. There will be earning downgrades, I'm sure, in some of the sectors. But broadly speaking, I don't see too much downside, as far as the large caps or some of the large caps are concerned, namely the financial names, IT, pharma, etc. Yeah, there are still pockets of overvaluation even in the large cap, but I can live with that. The problem still remains in the mid cap and small cap, areas. That is sector be dominated by mid cap, small caps, or the mid cap, small cap stocks. Still a lot of froth over there, and I think you would see a lot more correction over there. If you look at the valuation of the large cap index, let's say the Nifty 50 index, it's not too bad, roughly about 20 times 1 year forward, about 17.5 on a March 27 basis. There will be earning downgrades, I am sure, in some of the sectors. But broadly speaking, I don't see too much downside, as far as the large caps or some of the large caps are concerned, namely the financial names, IT, pharma, etc. Yeah, there are still pockets of overvaluation even in the large cap, but I can live with that. The problem still remains in the mid cap and small cap, areas, that is sector be dominated by mid cap, small caps, or the mid cap, small cap stocks. Still a lot of froth over there, and I think you would see a lot more correction over there.